Good morning, traders, and happy Monday. For today, the US exports dropped further while the imports stayed nearly the same. Former Fed member is calling for larger rate cuts. In some reports suggest a significant rate cuts might be coming. The US dollar index has slipped back to around 100.51 after a failed rally as markets process recent inflation data. There's a slight increase in expectations that the Fed might cut rates by 50 basis points next week. Despite stronger than expected economic growth, the market may overestimate the chance of a major rate cuts, as seen in high asset prices. Investors should be cautious, especially with the upcoming data releases on the import and export prices and consumer confidence. On the technical side, the US dollar index shows bearish signals with RSI and MACD indicators in the negative zone. The index briefly rose to 101.84 last week, but fell back to about 100.1, challenging earlier positive expectations. The key support levels are 100.60, 100.51, and 100.57. If these levels are broken, the index could drop to 100 or lower. However, some signs suggest that the trend might reverse, with the resistance at 101.52, 101.84, and 101.93. And the next for the WTI, before the weekend, the price rose to about 69.35 per barrels, recovering from a 4-month low of 64.75 last Tuesday. This rebound was driven by the hopes that the Fed will cut the interest rate cuts by 50 basis points and the expectations of a significant rate cuts in China. Despite a 15% drop in the oil prices this quarter due to the falling demand and low global consumption growth, OPEC Plus has delayed easing supply restrictions, and Libya oil production continues to decline. These factors, along with recent geopolitical tensions, suggest potential for future gains. The crude oil prices are likely to remain volatile, with a higher chance of further declines than rebound. To rise above $75, the price needs to be consistently stay above the $70 mark. The key resistance level are 72.10 and 72.76. On the downside, if the prices drop below 64.60 support level, they could fall to 62.34 or even $60. And last week, for the gold prices, surged to a record high of 2,586.10 per ounce, driven by expectations of a Fed rate cuts. Gold has gained over 25% this year, boosted by the Fed easing policy, strong central bank demand, and geopolitical tensions. Retail interest is also rising, with the Fed considering a 0.25 or 0.50% rate cuts. The gold prices continue to climb. Increased long positions in COMEX gold futures and a shift to gold as a safe haven contributed to the rise. Short positions have also increased recently. The gold's breakup above 200 531.70 set a new high. If the trend continues, gold may target 2,600 and $2,650. On the downside, support levels are at 2,531.70, 2,570, and $2,500. And that is all for today. Thank you for watching and have a nice day.